Hello and welcome, I'm Suyash Maheshwari and you are watching First Tick here on News 9, where we break down the morning action on D Street and bring you the top stocks that will be in the spotlight today. But as always, let's begin with how equity markets around the world are doing. Now, US markets continue to rally, albeit at a slower pace. Dow Jones ended about Wednesday's session almost 0.5% higher, whereas S&P 500 was flattish, up 0.16%, whereas the index reclaimed the 4,500 sort of levels. Nasdaq, on the other hand, ended absolutely flat, up 0.06%. European markets also closed higher on Wednesday as global markets digested data out of the US and China. The pan-European stock 600 closed up 0.4%. Now, Asian markets were mostly trading in the red this morning, with Hang Seng down 1.55% as we speak. Japan and China were also down nearly 0.5% this morning, while South Korea was trading with a cut of 0.3%. Among other cues, crude was the big mover overnight. Brent crude prices have corrected by over 2% and have slipped below the $81 a barrel mark. US 10-year bond yields have picked up by about 3 basis points overnight and are currently hovering around the 4.5% sort of levels, whereas the dollar index moved up marginally and currently sits at 104.5 sort of levels as we speak. Now, coming back home, Indian markets opened on a flattish note, with the first tick for Nifty coming in at 19,674 mark. Now, since then, in early morning, we slipped mildly in the red. Nifty went as low as 19,627 sort of level. So we are taking that support at 19,600 sort of levels. But now we have reclaimed the green level, the positive territory. Nifty at 9:45 a.m. was up 0.11%, sitting just below the 19,700 mark, whereas Sensex was trading 0.14% higher, above the 65,700 sort of levels. Nifty mid-cap continues its winning streak. The index was up 0.31% at 41,533 sort of levels, about 150-160 points shy of its all-time high levels, whereas the small cap index has made a new all-time high. It was up 0.59%. Now, this is as of 9:45 a.m. this morning and was sitting at 13,870 mark. Volatility has also picked up. India VIX was trading 1.45% higher as of 9:45 a.m. that is, and was sitting at 11.3 sort of levels. But with that, let's also welcome Mr. Brijesh Iyer of IDBI Capital. Hello, sir. A very good morning. Appreciate you joining us here on First Tick.
Morning, Suyash.
Sir, now the last time we spoke, you were extremely bullish about the overall setup of the market, and we have since rallied. I think Nifty itself has rallied by about 3% or so, since we last spoke. Where do we go from now? Is 20,000 achievable by next expiry, perhaps?
Morning, Suyash. So the thing is that today the market opened negative, but then there was immediately the market has picked up the volumes. So eventually, all this while, I believe the 50-day moving average, which is somewhere close to 19,600, would be the immediate upside. The largely view for the week was 19,300 and 19,800. So this is the 500 points range for the Nifty. So now, since we have scaled the first resistance zone, 19,600, I am pretty confident we are going to hit 19,800. This may be today or maybe tomorrow for the current week. And as you said, if 20,000 levels on cards, yeah, definitely. Technically, the triggers are 19,800. As and when we see a weekly close about 19,800, I am of the opinion that we might go back to the all-time high level, which is 20,222. So the structure from the weekly and the monthly point of view is very positive. I think we should be heading higher. 19,800 can be the weekly resistance, but then I think that should be taken out maybe in the next week. And once we have a confirmation close about 19,800, definitely we should be talking of another 400 points rally on the Nifty. Bias is extremely positive. On the way down, 19,600, 19,500 will act as a support. So that should be the base area. I don't believe this level will be broken that easily. Only by any chance, if those levels are broken, then my view might go wrong. But then as of now, I believe we should be heading 19,800 today, tomorrow. And gradually we should, once we see a close, 20,222, what was the all-time high level, we should be heading towards those points.
Now, sir, between the two Nifty Bank and Nifty Bank has been a clear outperformer at least in November. But unlike Nifty yesterday, we did give off some of those morning gains and ended about 200 points shy of that day's high. Are bulls taking a breather here, or or is the rally nearing its end?
No, I think yesterday what we saw in Bank Nifty was more to do with the weekly expiry. But the good part in the Bank Nifty was the closing above 44,000 level. So all this while when the Nifty took a breakout, the Bank Nifty was not crossing 44,000, and yesterday the Bank Nifty has closed above 44,000. So slightly the short positions in the Bank Nifty has got unwinded. So that's a good point. But having said this, Bank Nifty has got another resistance, very strong resistance of 45,000 level. So, the way I'm speaking for the Nifty at 19,800, the level for the Bank Nifty is 45,000. Bank Nifty needs to close above 45,000. Once the Bank Nifty sees a close above 45,000, I think there will be fresh triggers in the Bank Nifty, and stocks like Axis, IndusInd Bank, ICICI Bank should contribute to this rally, and even the Bank Nifty should start performing. So right now, specifically, maybe for today, tomorrow, if somebody is watching, taking a view, slightly cautious view, 44,500, there is a lot of call writers, so might be for the day, it might act as a resistance. I would be happy if I see these levels be taken out on our higher side.
All right, that's the view on Nifty Bank. Sir, but we also got to talk about the broader markets and how resilient they have been in the face of volatility. Now, all through last week and even this week, Nifty small cap has been, trending higher and making all-time high levels pretty much on a daily basis. But Nifty mid cap, sir, it's on a 10-day winning run, has reclaimed that 41,000 mark after almost 2 months, just about 150-200 points shy of that all-time high level. Is Nifty Mid Cap 100 the next index to perhaps scale that a new record high?
I cannot deny that. Definitely, I think the participation will be more with the mid cap and the small cap if we compare with the heavyweights. So, as the way you're saying, I think it will be pretty much on the cards. I think mid cap 100 and small cap, both this segment, I think, should contribute to this rally. That should be the player.
All right. Sir, shifting to stocks, one of the stocks that was on my radar at least has been for a couple of sessions is Yes Bank. Now, Yes Bank opened about 2% lower this morning. It has pretty much wiped off all those losses and has moved in the green. In the last 6-7 sessions, I'm made to believe the stock has rallied nearly 28%. I mean, there was a news trigger on the fact that, Yes Bank has received about 128 crores from the sale of NPA portfolio of JC Flower Asset Reconstruction. But from a technical standpoint, how is, Yes Bank looking at on price charts? Can the exuberance perhaps continue?
I think for the very first time now, the S Bank has moved up the range. So all this while the stock was consolidating in a range, and that 15 to 19 was the band in which the stock was trading. So for the very first time now, it has broken. 20.60 is the high for the current week. So I think more 5 points rally. This purely from the trading point of view, maybe from the 15-20 days kind of structure. I think another 5 points is due in the Yes Bank. So from the levels of 19, so maybe 24, 25. So that should be the continuation of the trend in the Yes Bank. Somebody is having a position should hold the position. Anytime when it comes back to 19 level, can be an opportunity to play for that 5 points kind of a move. So the view is positive. One should hold the position is what I believe.
So another stock I wanted to pick your brain on was Reliance Industries. Now Reliance Industries was one of the better performing stocks yesterday. It was up about 1.8% or so, has formed a strong green candle and has moved above the 40-day exponential moving average for the very first time since September 15. Can we perhaps see more upside from here on, given the fact that, Reliance Industries has been stuck in a range of about 600 points for nearly 25-26 months?
Uh, Reliance, somehow directionally we are not betting, but definitely, as you're saying, it is moving out of a range, so there is a trading opportunity. And if you see the daily chart on 28th of September, there was a huge selling, and the selling came from the level of 2380. So that is going to act as a hurdle. So in the near term, if 2380 levels are taken out, so right now from the current level we can bet for 2380. But in the near future, if 2380 is taken out, then there is a reversal from the downtrend. Though the falling structure of the Reliance will be reversed, and it may start on the high bottom structure. So the trigger is 2380. So right now, at this momentum, I can play for 2380. If in the near future, if you see that Reliance closes about 2380, then I think it can go back to 2500 level. So step by step, not too aggressive, but small trading view. Definitely, there is opportunity for a trading point of view. Positional bet should be can be taken only when 2380 level is taken out with volumes.
So another stock that I wanted to talk to you about was Bajaj Finance. Now there is a news, Reserve Bank of India has asked Bajaj Finance to stop its lending business under e-com and Insta EMI products with immediate effect. Now the company in response has come out and said that there will be no material impact on its financials. However, the stock has taken a hit. It was down about 2.5% since this morning. Even on a 1 month chart, the stock is down about, I think, 12-13% or so. What's your view on Bajaj Finance, sir?
Slightly profit booking is seen in a monthly chart, but then the trend is super bullish for the Bajaj Finance. The perfect level to make an entry is the 200-day moving average, which is 6,876. And I believe today the low was 6,931. So somewhere close to 6,900 is a very technically as well as fundamentally, I think that's a very good level to make an entry. 6,900 should be the level where I don't think the way the market today the recovery, what we are seeing in Bajaj Finance doesn't specify that we might see this level, but then that is the level, exact level when our risk reward ratio, everything will be favorable. One should use this opportunity to make a fresh launch in the Bajaj Finance.
All right, that's the view on Bajaj Finance. But sir, before we let you go, what are the top 4-5 trading ideas for our investors and viewers for the short term?
Yeah, definitely. So I'll start with the banking. Within banking space, I think Kotak has seen a base formation. There is a divergence from the technical point of view. It's more of a trading bet. I think Kotak can be bought at the current price with a stop loss of 1734 for the price target of 1830. Next one is from the defense, this Cochin shipyard. So again, it's given a kind of a range breakout, and the volumes have been following with this breakout. So 1078, current price we should buy. The stop loss for the trade would be 1041 for the price target of 1155. After this, one more stock which is giving a reversal from the bottom is Asian Paints. So one should buy Asian Paints at the current level. Stop loss for the trade would be 3075 for the target of 3177. So these three stocks are the trading kind of strategies. Little bit of positional view, I can see is Radico Khaitan. So again, this is given a very good strong breakouts. The momentum is very strong. One should buy at the current price. 1380 can be the stop loss for the price target of 1520. Lastly, again, one more positional bet, which is the ICICI Pro. It's very strong bet. I think the right now what target which I'm talking is small 20-25 points, but it can be a huge reversal from this point of view. So ICICI Pro at the current price with a stop loss of 533. Trading opportunity is 568, but somebody wants to take a long-term view can hold for 650, 700 level also. So these are the 5 bets which I think which should work with the market.
All right, that's the view from Mr. Brijesh Ail, Kotak Mahindra Bank, Cochin Shipyard, Asian Paints, Radico Khaitan, and ICICI Prudential Life among his top picks for the short term. Sir, always a pleasure speaking to you. Thank you for joining us here on First Take.
Thank you.
But moving on, let's also look at how the markets are doing. Now, Nifty 50 has reclaimed that 19,700 sort of levels, but it is facing resistance, and as you can see on your screen, it has in fact slipped below that. Nifty 50 made an intraday high of 19,710, but now is trading with a cut of about 16 points from those levels. Nifty 50 was up 0.1%, sitting at 19,694 mark as of 10 a.m. this morning, whereas Sensex was up 0.08%, holding on to the gains above 65,700 mark. The mid-cap index is also trading above the 41,500 sort of levels, whereas the small-cap index is also holding on to the gains, again trading up over 0.5% at 13,862 sort of levels. India VIX was up 1.5%, and as of 10 a.m. it was sitting at 11.3 levels. But with that, let's also welcome Mohit Gang, co-founder and CEO of Moneyfront. Hi Mohit, a very good morning. Now Mohit,
Hi Suresh, festive wishes to you and your viewers.
To you too, sir. Now, since November, Mohit, the overall texture of the market is, looking extremely positive. I'll ask you the big one right off the gate. Can we make a new all-time high in this exuberance of in November that we are seeing?
Suyash, look, yes, honestly, I think the way the momentum of the market is, and I think after the FOMC meet and after FOMC holding the rates for one more quarter, I think the market sentiment has turned extremely bullish. Just that one small signal from FOMC has led to the US yields decreasing from a peak of almost 5% to 4.5% today. It's a 50 bips decline in less than a month kind of a time frame, which is massive, right? And which has led and fueled a global rally across, including S&P and Nasdaq. And Indian markets are obviously not aloof, right? So we sink and sail in tandem with the global markets. And given that the Indian fundamentals, the Indian domestic story has been extremely robust. The result season has been fairly good. If you see the result season, the profitability of almost 3,500 listed companies has increased by 41%. The PAT, which is a huge significant jump. Though the revenue growth has not been fairly significant, but the overall PAT jump in this result season has been fairly robust, and the consumption story goes along, and the DII story along with that, I think, is leading to a massive rally in the markets. Plus, the pre-election mood is also kind of bullish. So yes, to answer your question, markets can make an all-time high in this given rally, given the sentiment and the DII flow in the market is fairly strong.
Now, Mohit, since you touched on the September quarter earnings, I mean, they have been fairly robust, but one thing that, stood out as a negative for me was the rural demand, which was still lacking. We saw it in the results of Mahindra and Mahindra, where tractor sales had taken a hit, in the results of FMCG, where volumes took a hit as well. I mean, consumption is still lacking, at the bottom of the pyramid. But given that Q3 is a seasonally strong quarter for us, given the festive demand and the wedding season, do you expect any sort of a reversion over there? Does your channel check suggest any sort of a reversion?
Suyash, I think it's a very pertinent question, and that has been puzzling to the economists on a whole, that the rural recovery has not happened that fast as the urban recovery, right? But as you rightly pointed out, the harvest season is going fairly decent this time around. The festive season has been a little delayed this time. If you see, the Diwali has fallen in the middle of November, so the festive season has been a little delayed this time around. As the marriage season now follows from November 23rd to almost middle of December, there are 35 lakh weddings. a massive number, and it's a record of all time, right? So I think the seasonal demand and the rural factor will perhaps kick in this quarter, which is what everyone is hoping for. So my sense is we should wait for this quarter to actually figure out whether the rural demand has picked up or not. But all indicators suggest that the rural demand will pick up this quarter.
All right. Now, talking about exuberance about Indian markets, Mohit, for the very first time in nearly a month, foreign institutional investors have returned to the markets. They bought equities worth about 550 crores or so, in Wednesday's session. And I mean, the question really is, whenever FIIs return back to Indian markets, it's a bank that rally. Can we expect the same this time around, given that the valuations, at least for the private banks, look relatively cheap?
So yes, I think banking is a lead indicator of the overall economic story. So my sense is the lead banks of the country, the bigger private sector banks, they've not been performing that well for last one odd year. The likes of HDFC, ICICI, Kotak, Axis, they've all given single digit returns or low returns or not no returns at all for last 1 year, right? So my sense it's a long overdue kind of a rally. So banking perhaps will lead this pack. And we are also fairly bullish on the IT pack overall, Suyash. I think with the yields falling off, the yields tapering, and the chances of a rate hike reducing further, IT pack from here on in a year and a half should actually outperform, given that it's been a relatively laggard for last 1.5 year again.
I actually wanted to touch on the IT pack because my question was it a one-day sentimental sort of a rally that we saw because the inflation print from the US was benign in fact? But I mean, how do we rally from here on? I am talking about the IT pack because demand is still lacking and there are talks of US slipping into recession by the second quarter of 2024.
True that, Suyash, but honestly, I think IT has been a massive underperformer for a long while now. In fact, the large cap IT names, and when I'm talking of IT, the large cap IT names, the mid cap IT has relatively done better. The large cap big names, the big four or the big six of the IT pack, have just not delivered for last quite some while. Now, the whole thing is when the US rate cycle starts reversing, which it will perhaps by next year or next financial year, I think that's the time the IT pack always does well. When the yields reverse, the IT pack relatively shows its strength. Somehow there is a negative correlation out there, and I think that should play out. By next financial year. So I think it's time that one can start positioning a trade in the IT pack, not to a very large extent, but gradually building up the position to kind of make to kind of avail of the benefits when the yield cycle starts reversing both in India and the US by next financial year. And plus it's also a relative valuation game. So look, all the IT biggies, if you see, they're sitting on huge loads of cash pile. You see TCS going for a buyback right now. Infosys has always been sitting on huge amounts of cash. So strategically, these are efficient capital allocators. And once a company becomes an efficient capital allocator, it can't fundamentally go below threshold P level. So my sense is de-rating has happened to a large extent. There's very little chance that the sector will de-rate further from these levels. Right? If given the stable valuations and given the stable earnings trajectory, I think the pack should turn around by a year or so.
Any particular stocks that are looking attractive in the IT space?
Look, all the large cap names out there, honestly, though these might not be like relative chart toppers as you call them, but they should give reasonable and modest returns with a year and a half kind of an outlook. And the top two out there, I think, lead the pack. Both Infosys and TCS have massively underperformed, and I think it's time that the biggies, the large cap names, not just in IT but also in banks, should lead the charts.
All right, TCS and Infosys it is. Sir, I also wanted to pick your brains about this US recession narrative that is once again, picking up. I mean, for the benefit of our viewers and for me as well, could you explain us why this chatter is again picking up? Because inflation is coming off nicely, both, on a wholesale level and at a retail level. I mean, there is like economic indicators are showing that, you know, US economy is resilient. So why is there a chatter of, you know, perhaps US slipping into recession?
I think, look, it's all about how the economy lends, or how the Fed allows the economy to lend, whether it's a
Hmm.
hard lending or a soft lending. The rates have remained elevated for a fairly long while, and whenever the rate cycle remains elevated for a fairly long while, the lower strata of borrowers will go through a massive churn, which we have seen in few of the US banks going belly up. We have seen and you will also see the lowest strata of individual borrowers defaulting, and a lot of credit card defaults happening out in US. There's already a lot of chatter amongst the credit card outstanding at an all-time high levels on the personal individual borrower front, right? So I think whenever the rates remain elevated, which it has been for a fairly long while, and there is no indicator that the rates will come off very sharply. Rates will come off. Perhaps we are at the peak of the cycle, but how fast will the rate come off? Again, there is no indicator, or there is no likelihood of a quick rate cycle reversal out there, right? So whenever this kind of a scenario happens, honestly, I think the whole debate is how will the economy recover fast, whether it'll be a hard landing or a soft landing. The debate is still split wide open. If the rates remain elevated for a fairly long while, you might as well see a hard landing for the economy, which will not augur well for the global economy also, not just for US. But if there is a soft landing, which means that if the Fed tapers off, if the Fed reduces the rates gradually and starts reducing much in advance, then perhaps we might see a soft landing for the economy, and that in turn should augur well for the markets also.
All right. Sir, shifting focus from global markets to the primary markets, and I know you have always advised caution, at least on the show, you know, before looking into IPOs, but we have a big one lined up for next week, the much awaited IPO of Tata Technologies, the first by Tata Group in nearly 2 decades, open for subscription, you know, next week. The price band has been fixed at around 475 to 500 sort of levels, at a valuation of about 20,200 crores. Mohit, valuation wise, is the IPO fairly priced?
Look, Suresh, I go with how the PE investors have entered in the stock, right? In the month of October last year, TPG bought stock. Actually, there was chatter that the stock will go for listing last year when Tata Motors was about to offload around 9 to 10% odd stake. But finally, it didn't materialize because the entire chunk was taken up by TPG at that point in time. They entered at a valuation of 16,300 crores, right? Which is a year back kind of a thing. And from 16,000 odd crores, the valuation today at the cutoff price will be somewhere in the range of around 20,000 odd crores, which is a 25% jump from there on in a year's time. Look, honestly, but you can, as retail investors, as individual investors, we can never try and chase what the private equity guys are chasing. To me, I think it's reasonably priced. Given that the stock and the company enjoys a fair bit of domain expertise, has been a long with a good track record, good revenue, what do you say, order books, and good profitability and margins and everything at around 31 times, which is what the P should be for FY24. It's a reasonably priced stock, given that the competition is more expensive in this domain, which is the mid cap IT space. If you see the peer group names, they are all quoting at a slightly higher valuations, whether be L&T in that space, or whether be KPIT, or a few other names, right? So I think they have obviously the valuation, there is a lot on the table. Plus, also, if you see the unlisted price of the stock was quoting almost at 800 to 1,000 rupee in the market,
Right.
which obviously was unreasonable and absurd. But at around 500 odd rupee kind of a price, I think it's a reasonable buy for long-term investors. I think it's a fairly good issue to subscribe to.
Now, Mohit, I was looking at the details of of the IPO. It's a pure offer for sale. Now, is this something investors should be concerned about?
Look, Suresh, offer for sale, a pure offer for sale is always a cause of concern, but perhaps not in this case because out here, if you see, Tata Motors per se is kind of offloading stocks and plus few of the private equity players and some of the lead promoters. So I think finally, look, the company doesn't need so much money for its company's balance sheet and P&L and see whether there is enough money for the company to grow further and expand from these levels. So perhaps I think from those fronts, company is fairly well fortified to my understanding, right? OFS is an issue when you see the internal accruals of the companies are not much, and the promoters are trying to or some few individual promoters are trying to dilute their stake and raise some quick cash. In this case, I don't think so. That's the story. So out here, I think it's a good opportunity for retail public to enter this stock, which has always been an institutional play thus far, right? So I think it's a good opportunity overall.
All right, that's a view from Mohit Gang. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
My pleasure, Shush. Thanks.
But before we wrap things up, let's also look at how the markets in general are doing now. If you can pull up that chart of sectoral indices, I think most of them are trading in the green. As you can see on your screen, Nifty Metal, which was among the top gainers yesterday, is perhaps seeing some sort of a profit booking take place. Early this morning, Nifty Metal, as of 10:15 a.m., I mean to believe, was down 0.4%. Another sectoral index which was in the red was a Nifty PSU Bank. It was down 0.38%. Now these numbers are as of 10:15 a.m. this morning. All other indices are trading with decent gains. Nifty Pharma is up over 0.5%. Realty continues to build on to the gains. It's up almost 0.5%. Nifty Bank on the other hand is flattish, and Nifty IT has also picked up and is and at 10:15 a.m. it was hovering above the with gains of about 0.5%. Let's also look at how the markets in general are doing. As of 10 a.m. Nifty was up, has reclaimed that 90,700 levels. Nifty as of 10:10 a.m. was up 0.21%, sitting at 19,716 mark, whereas Sensex has reclaimed that 65,800 levels. The Nifty Midcap 100 index is seen, facing some sort of a resistance at 41,600 levels. But remember, we are just about 150-200 points shy of that all-time high levels. The small cap index is also holding on to the gains, trading at 13,850, about 30-40 points shy of its record high levels. But with that, it's a wrap on this edition of First Take. Keep watching News 9.
They picked my husband. He was tortured there for 2 years. He was enforced disappeared. We had no idea where he is. Within 15 minutes, we got the information that the whole area is surrounded by Pakistan. I came out from that in disguise, and after